Good afternoon, traders. This is Bill Baruch with Blue Line Futures, and this is the FX Rundown. It was a weak session for the dollar. Saw the dollar index trade down to the 50-day moving average. Core CPI missed for the second month in a row, came in light below expectations, and this started getting the selling going. Now, we've seen the dollar already weaken from that high on Monday into Tuesday, and ultimately we had non-farm payroll. Was mixed, but it was the Fed rhetoric that really talked the dollar up and got things going early in the week. Fed Chair Powell last week, his hawkishness was not confirmed from the core CPI data we saw today. Inflation ultimately really isn't there. So the dollar is pairing those gains, and we're hitting that 50-day moving average today. What does that mean for the euro? Well, the euro is not quite to that 50-day moving average, but it is testing and actually nudging above our major three-star resistance. This ultimately should start to provide a little bit of a tailwind. Now, you do have that 50-day just above. You want to watch that, but really, we were looking at that three-star resistance as being a level you want to see this euro get out above, and then you can start to see the buyer step in. It's a nice bottoming pattern. We pointed to that in the FX Rundown written section earlier in the week that when it made that new low below 115.25, didn't close down there, but actually closed back above there. That was the washout that squeezed the longs, and now this thing is ready to go up. You're starting to see that weakness in the dollar. And again, the dollar index is where we're watching the 50-day moving average more closely in, and it's testing it right now. Tomorrow, on the data front, we have Michigan consumer sentiment. Now, this is the freshest data point you're going to get all month, each month. This is for October already. So you want to see what this consumer sentiment is. It's been very strong recently. Now, the equity market did already show some signs of weakness earlier in the month, but it may not be in this data quite yet. So you want to see what this data comes out as. If it misses, you're going to see continued pressure in the dollar. So watch for that. Now, what else we're looking at? The yen. Now, the yen's seen a nice boost on safe haven demand. It's above what we have as the first layer of major three-star resistance. Still, this unenthusiastic trade is coming out of the gutter, but you also have another layer of major three-star resistance right around 90. So we think it's going to stay capped at 90. The S&P, it did try to find some footing late in the session, but if we can see continued sell-off, then you're going to see a bid in that yen, but it does feel that this sell-off could be tiring itself out. You want to see what happens in the Asian hours, and if some of this continues in Asian hours, then you're going to see that yen bid. But remember, there's a lot of resistance up there at 90, so watch for that. One thing we really do like today is the Aussie dollar. Now, we saw a lot of weakness in the Aussie dollar yesterday with global equity market weakness, but it did find very solid footing today after the US CPI missed. Not only that, there is news that President Trump will meet with China President Xi sometime next month, and that's boosted the Aussie dollar. Remember, the Aussie is one of the best ways to capture growth or movement in China because it's their number one trade. It's Aussie's number one trade partner is China, so you're going to start to see that in that movement. Good reversal on the bar today, on the daily bar. Look for some follow through. There is resistance where it is testing now, but this is now the second time up there. Ultimately, you could count it as the third time up there, 2 times intraday today. Look for this to get out above about 71.5, and you can start to see buyers step in as a tailwind. We are now introducing bullishness in the Aussie dollar with the stop below this low. The risk is defined. Look for this trade and look for some tailwinds as the overall global equity sentiment, global risk on sentiment starts to come back into the market later tomorrow, probably in the U.S. hours. So look for that. The Canadian dollar did not get the same type of footing that the Aussie did today because crude oil finished lower on the session. Crude oil is flirting with our 71 level, a big level right there. It is below that, but with the equity market weakness that dragged crude oil lower and the Canadian dollar stayed down as well. We do like the Canadian longer term, but it doesn't look as much of a clear defined risk reward as the Aussie. So keep an eye on all of that. Give us a call if you have any questions. We're here to help with anything. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.